Good day, my name is Destiny, and welcome to Pearl Lemon Accounting. Today we'll be focusing on the reversal on impairment and its tax implications. A quick recap on our previous impairment video. Impairment loss occurs when the carrying amount is above the recoverable amount of an asset. The recoverable amount of an asset is determined by the higher of two amounts, which is one, the fair value minus selling costs, or two, the future cash flows expected from the asset. So today we'll be dealing with the reversal on impairment. This occurs when the new recoverable amount is higher than the new carrying amount. Thus, the carrying amount has to be increased to the level of the recoverable amount. Yet, if the new recoverable amount exceeds the old carrying amount at this point, then the old carrying amount takes over as the carrying amount of the current period. Illustration 1. Federal Limited has a tennis racket producing machine. This machine was bought for 600,000 in 2018. It has a life expectancy of 10 years with a residual value of $80,000. In 2014, Federal Limited realized that the future cash flows from the machine would equal to $370,000. An analysis done by a market research resulted in that the machinery could be sold for 400,000 with selling costs of 20,000. At the end of the 2015 year, Federal Limited is told by the market expert that the new machinery could be sold for $355,000 after selling costs. Now we get into calculating the initial impairment loss. Our depreciable amount would be 520,000, resulting from 600,000 minus 80,000. Thus, we take your 520,000, you divide it by the 10 years that it's expected to be in use for, times the 4 years that it's already been in use for, and it gives us our cumulative depreciation of 208,000. 208,000, you minus it from the cost, gives us our carrying amount of 392,000 at the end of the 2014 year. Our recoverable amount would be 380,000, resulting from the 400,000 that we expect to get minus the 20,000 selling cost, which gives you 380, which is above the 370,000 expected to be received from the future cash flows. Thus, our impairment loss would equal to 392,000 minus 380,000, which is 12,000. The reversal on the impairment, however, comes in the year of 2015, where we are given that the new recoverable amount is 355,000, and the depreciation for 2015 as a result of the impairment loss in the previous year would become 50,000. The 50,000 comes from the 380,000 from the recoverable amount from 2014 minus the 80,000 divided by the 6,000 remaining years. The carrying amount at year end of 2015 would thus equal to 380,000 minus 50,000, which gives you 330,000. Since the new recoverable amount exceeds the carrying amount that has been calculated, there is an impairment reversal. But the extent of the impairment reversal will be determined by the original depreciation policy in Federal Limited. If the new recoverable amount is below it, then we will increase it to the extent of the new recoverable amount. But if it's below the carrying amount, then it will be increased to the extent of the old carrying amount. So the old carrying amount would equal to 340,000. We get this amount by calculating the accumulated depreciation from the old depreciation policy, which is 52,000 times the 5 years, which is 260,000. Thus, you take your 600,000 cost minus 260,000 and it gives you 340,000. This means that the new recoverable amount is above the 340,000. Thus, the 340,000 will be used as the new carrying amount. The tax implications of the impairment is that an impairment loss can be deducted from your taxable income, while a reversal on impairment increases your taxable income. I hope this video was helpful. Like and subscribe to the channel.